Here to continue our conversation on the impact that these deals may have and the road ahead for the automakers is Tom Narayan, global auto analyst with RBC Capital Markets. Tom, welcome. Good to have you with us. I guess what investors wonder is whether these settlements are currently baked into the stock prices we're seeing and how they will affect the stock price going forward.
Yeah, I think we've done some math on this to show that the net impact of a 25% increase in labor costs, remember it's over 4.5 years, is actually only about 100 to 150 basis point negative impact to profit margins, which is no small matter, but basically your 7% margin, let's say, goes to 6. So I think they'll be able to digest it. The bigger issue, and probably why these stocks have not been up that much on the news of the deal being struck, is the EV slowdown that has been plaguing these stocks all last week and into this week. It's a much bigger story, a much longer term story than this. We're going to have a pretty quick snapback, I think, to this in terms of production. It may not make up the whole loss, as Phil was saying, but certainly I think this is secondary to the bigger story in autos, which is the EV slowdown.
So let's talk about that. Why is there an EV slowdown? And is it in part because in the U.S. market especially, there is still a heavy interest for SUVs and heavier vehicles, and that is not an area that, so far at least, has been really penetrated by the automakers.
Yeah, that's one of the key reasons is the form factor. A lot of field folks don't know this, but the biggest driver of battery range is not actually the size of the battery, it's the aerodynamics of the car. It's the reason why Tesla didn't really make an SUV or didn't go aggressively in it. They're not very aerodynamic. So that is one factor. The bigger reason, though, I think, is the early adopters, the people who bought the $60,000 and $70,000 Teslas. Those guys are kind of done already. Well, now we're into at the main street, the buyers of the EVs who aren't as, EV friendly. They don't realize charging is actually everywhere. They think they need 300 miles of range. So it's a lot of education for those buyers to get comfortable with it. Lastly, I would say pricing. I think overall auto pricing needs to come down. You heard what Elon said on his call. There's an affordability issue, high interest rates. So you put all these three things together, I think that's what's causing the slowdown.
So let's go back to these. That's very interesting explanation, and I buy it completely about the early adopters having gone in at a higher price point, and now you have a mass market that you have to exploit and tackle. Let's go back to the big three. What's your view of those three stocks?
Yeah, I think it's going to be a little bit challenging in the near term. I don't know how long the near term is. You have price mix. That's my biggest concern for these companies. It's been up like 35% from 2019 to 2022. A lot of sectors are seeing crazy inflation, right? But you're seeing affordability hit some consumers, high interest rates, et cetera. So I think price mix coming down will be difficult on profitability. Now, a lot of this is already priced into the stocks, but it's difficult in a cyclical industry to tell folks to buy auto stocks when numbers are coming down. So I think it could be somewhat challenging, and they have to figure out this EV slowdown. A lot of them, like Ford notably, is very heavily invested here. If EV demand doesn't come in, it's going to take more losses. Unfortunately, I think in the near term, it's going to be a kind of a slugfest. Price mix probably will come down, and it may keep folks at the sidelines.
Tom, I've been thinking a lot about Toyota lately and whether the hybrid approach is being vindicated. If it looks like consumers are actually kind of turning towards that option as the best way to hedge and kind of get both the range, but also the peace of mind of having, gasoline supplies in their car. And I know they've obviously done everything up to the minivan at this point. And for years, it looked like hybrid was going to be the wrong approach and the market was unforgiving about it. I wonder if the tide is turning now. And if it is, who else does that favor? And what does that mean for the investments that Ford and GM have made?
Yeah, this is definitely the hot topic all day, is now there's an emergence of hybrid. I think it could be near term, certainly. Take a look at Toyota's profitability. It's done really well by not capitulating and doing EVs. And maybe it's a smarter approach, right? Wait for everybody else to slug it out and get the cost down and then do EVs later. That might be. And take a look at Stellantis. That's another example of a company that somewhat underinvested on EVs, and in the US, it's Jeep and Ram. They don't really have to electrify those. So a hybrid approach has definitely worked well for Toyota. Maybe being underinvested on EVs is smart, and you see Stellantis benefiting. Take a look at Stellantis stock chart versus Ford and GM over the past few months, and you'll see a very big contrast there. So you may be onto something, but ultimately, I think these are all near-term dynamics. Some people are playing this thesis. Let's wait it out, see the costs come down, then we'll go all in. So I don't really know the answer to that, but we do know, let's not forget, electrification is happening. It's just, I think we've hit a little bit of a slow patch. Maybe hybrids could be a near-term solution.